Jim, Dana's been around for over a century. You've seen plenty of cycles. You do have some exposure to Mexican production. What's your thinking if 5% comes and then 10 and 15 and so on?
Yeah, well, at least for Dana, we're fortunate, and we've set up the business model the right way. About 50% of our business is in North America. More than 40% of that's in America. And therefore, the way we've set up our supply chain is largely it's just component business, but we'll work through it. I would say on overall, we work for the 232 as it related to steel and aluminum on that situation, and whatever happens here, we'll work through it. If it continues to be extreme, that's going to be a whole other situation, but let's see how things go over the next week or so.
When we hear numbers like 5, 10, 15, what's a reasonable pass-through to your end consumer?
Yeah, well, ultimately, Dana, like most mobility part suppliers, we're a B2C company, so we're selling to the OEMs. I can't speak for what they can pass through. I can tell you this, when you think about the 232, that was obviously 25 and 10% respectively on steel and aluminum. We found a way to work in partnership with our OEM customers, if that's John Deere or if that was GM or whoever it might have been, and we found a solution to it. So I think we'll find a solution as we go forward here.
What do you mean you found a way? Did you eat the cost, or did you pass it on to your suppliers?
Well, combined, we work through it. In our business, you obviously have to find your way to work through your share. That's in VAV and cost reduction on the product, cost reduction on the shop floor, logistics, whatever, and then the customer works with you as well through that process, and that's what we did in this case.
So how do you characterize overall when someone asks you just how much is the auto sector and the auto parts sector exposed when it comes to Mexican tariffs, even the 5% that are likely to go through on Monday?
Yeah, well, I think the numbers are pretty well published out there. It's about $165 billion on two-way trade in a year, or $452 million on a daily basis. So they're certainly exposed. We can all do the math on that. So we need to navigate through it. I don't think anybody is a fan. I'm not a fan of tariffs in general. But if it's to a better means to an end, hopefully that's the case. I can tell you that I'm pretty positive on what came of everything else relative to USMCA and the status of where that's at. Think about where NAFTA was and how archaic that was, and now hopefully we can move past that.
And when it comes to China, for example, you manufacture in China for China, correct?
Yeah, we're very much, our whole business model is very much a build where we sell model. We'd only have component supply coming in from other locations. It's the only chance of being successful in the mobility parts business is to have a global value stream, and so that's what we do. But for large things such as axles and drive shafts and so on and so forth, transmissions, we largely, again, build where we sell.
Do you think that you come under pressure for some of the auto manufacturers, though, who may be facing increased tariffs? Let's say BMW's making a car in Mexico, 5% or 10%. Does that translate down to you in terms of pressure to reduce your cost?
All the customers today, I mean, if you think, I like to call it a crisis is a terrible thing to waste. Back, you go to 08, 09, everybody was in a crisis mode to figure out how to navigate through that. The OEM customers absolutely understand that a healthy supply base is really critical for their success as well. So the way this works, no different than just annual cost reductions with our customers. You sit down with them, you try to take it out through pure waste elimination on whatever amount that could be. There may be some give and take on relates to price, but it's not so material that, in an example of Dana, you'll never see us communicating too much about how much cost downs, if at all, relative to our earnings reports. And you've seen our earnings over the last 3 to 4 years have just been spectacular. So we'll just continue to work in partnership with our OEMs.
Jim, when you think long-term, over decades, I mean, people have argued for a while now that global supply chains had already gotten stretched prior to really even the president coming into office. I wonder if you think there's any return to that prior level, and how much tolerance overall manufacturers have to higher costs and their willingness to repatriate or nationalize supply chains.
Well, I think it's all going to come back to their ability to be not just a domestic supplier of vehicles but also be able to export that. I mean, and again, it's going to come down to the OEM, which has more of an export model than others, and that toleration factor is going to come into play. I can't speak for, we don't even get that publicized information. We don't spend a lot of time on it because it doesn't impact our business. But, some OEMs do more exports than others. It's going to impact them more. Their tolerance is going to be less, so on and so forth. So will be interesting for them. They'll navigate through it. There's some incredibly intelligent people running OEMs around the world, and they'll work their way through that.
Jim, there have been concerns on Wall Street that this is just rubbing salt in the wound of an industry that is already facing some major structural challenges. Peak auto cycle, for instance, the rise of ride sharing and Americans' ultimate desire to own less cars. How do you respond to some of those worries? Are they legitimate?
I think there's some legitimacy to it, of the concern. I'd say the larger concern is really just getting to a point of stability and haven't been able to predict where things are going to go. Excuse me. And so ending up where it's at. I don't think as concerned about what's happening in the immediate term because, I got to say the good thing is that let's take the situation between the United States and Mexico right now. They're talking. Things are happening. We're talking about how we can be better in the end. And as I said, not to overcook it, but, even getting to a new NAFTA with USMCA is going to be positive. I think you'll find that on both sides of the aisle that it's going to be positive. So I hope and I sure expect that it's going to be short term, if anything at all. And in the end, it's going to be a better means to an end. So hopefully that's how everybody else is seeing it.
But Jim, when you think about manufacturers who did bring some production out of China to Mexico only to get hit with this, I wonder has there been a more challenging time to be a supply chain manager? I mean, is this as bad as it was in the 80s in Japan or worse?
No, it's not even close. I can tell you in the whole top 1,000 things I've had to work on in the last year or two or three, this isn't anywhere close. I mean, at the end of the day, you have a lot of moving parts when you're running a multifaceted business. In our example, we have 145 facilities around the world in 33 countries. I mean, there's just a moving of the shells a lot, and things have been relatively short-term as it changes on the tariffs and so on and so forth. If you take the 232 example yet again. So you navigate and react as it is, and no, I don't think it's the case at all.
Have you moved any jobs back to the United States?
I would say big picture, no. We haven't needed to. We kind of just, you don't pivot in a capital intensive industry like ours. You don't pivot in a New York second, as I like to call it. And so, I mean, there could be some movement, but it could be some movement both ways. So, and there's plenty of domestic manufacturing in those countries, so things move around as well.